Okay, good morning, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or a yes there, just to let me know that it is indeed working. I hope everybody's having a fantastic morning so far. Looks like our trading's going really, really well, so that's exciting. I'm excited to kind of recap our overnight and I guess our last 24 hours, and we're getting close to wrapping up our trading week. So I'm excited to got a lot of good trades. I'm excited to close tomorrow. So. Um, All right, guys. Well, like I said, I just want to welcome over here. Also want to give a shout out and welcome those watching this in the recording. Want to say hello to you guys as well. Let's go ahead and get started. As always, I need to go over a disclaimer. You can lose all or more than your initial investment if you're not careful, so please be aware of how many pips you're risking on each trade, in addition to how big your lot size is, and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys. Well, I think first things first, maybe we'll look at the price action trade. This USD CAD trade um, worked out fantastically. Let's actually just kind of, this is a long position on the USD CAD. We posted this yesterday in the call and pretty much did exactly what you'd wish it would do, right? So um, let's do a rewind from yesterday. So if you do a rewind, let's see, yesterday, this is about where we were yesterday um, in the call. Yeah, about right here. So this is what we were looking at yesterday on the USD CAD is this flag pattern. So we had a bullish flag on the USD CAD and we had a nice little break of structure right here. And we had this untapped liquidity zone demand, right? So this is kind of like the bread and butter price action trade, right? Like if there's one price action trade you should be able to learn, it's this, in my opinion. This is about as basic as it comes. It's just a simple break of structure and then a pullback into demand. That's it. That's all that price action trade is. Obviously, we use the scanner to confirm this, right? So when you go to the scanner here, let's take a look. We have a strong buy signal on the USD CAD. At least last I checked, let's see if that's still true. And let's see. Yep, right here. So here's the USD CAD strong buy. Um, and it's a strong buy because of a couple of things. One, the shift this week was pretty strong with commercial. It was an 8.33% positive shift on the USD CAD, and we had a long-term buy. So the banks are accumulating buy positions on the USD CAD on a longer term, more broader perspective. There really isn't any sentiment signal, and that's okay. You don't necessarily need it to create a signal. But the combination of these two things right here um, uh, was enough to create a strong buy, right? So super awesome. Like that's a pretty so anyway, like I said, the scanner is what kind of led us to that chart in the first place. And then we came over here and then just followed our price action concepts from that point. So you use the scanner to kind of give yourself a little bit of a bias, right? Because the scanner is designed to kind of give you a direction for the week. So now you're just kind of trying to localize a specific location or an area where you'd want to get into the trade, right? So we did a bang up job here on the USD CAD yesterday. Um, so why this area? Why did we pick this area? So this is the precise area. This whatever happened right in here, this is the area that created this leg higher. Okay. So whatever the banks did, whoever bought a lot of currency in this area, insofar to create this type of a move that ultimately broke structure, this is what we have to pay attention to, right? So this is just classic demand zone. And by and large, this area had not been tapped into by demand or tapped into by the market yet. So it was demand zone that was just available, right? So that's why we placed a buy right here and a stop loss right here yesterday. Um, and now if we play this out, let's do the replay. Here's the replay. Did nothing, and then boom, we tapped in right there, and it actually stayed in here for a little bit. I got a little bit nervous, to be honest. Like, I'll be honest with you, I was nervous. Um, and then ultimately, let's see, it came down one last time. There it is. Yeah, it came down one last time. And fortunately, our stop loss was wide enough to let it do its thing. And then it was over really quickly. Like, it triggered. That's how most price action trades are. Like, they'll trigger, they'll either lose very quickly or they'll win really, really quickly. It's just it. There really isn't much of an in between. And so this trade was over last night within two candles. Well, after it decided to leave this area, it took basically two candles to hit our target, and that was a 1 to 2.75, so almost 1 to 3, which is really, really good. This is the type of risk management that you really want to get on trade setups, because if you can get this type of a trade setup, um, that allows you to have flexibility with losers, because naturally you're going to have some losing trades, right? This week we've been pretty much all blue, like everything, scanner signals, weekly trades. So far, at least the price action trades that I've triggered, like this one, I believe, I don't think we've had any losers yet. So it's just been pretty much all blue, right? Which is great. Now you're not always going to have that, right? We all know that. So we have to have our ratios like this or even better. It looks like we could have gone for more, but this is still really good. Because now if we have a price action trade that loses, it's like, oh well, I've got I've got that in the bag, right? If you risk 1% on this trade, you'll make almost 3% if you win, right? If you risk a half of a percent on this trade, you'll make almost 1.5% when you win. And so if you risk ratio that every single time about the same, uh, yeah, your chances of blowing up your account are not, well, it's not likely. You won't blow up if you have that kind of risk management. It would take a long time to blow up an account if you traded like that all the time. But this thing just keeps ripping, guys. I mean, my weekly trade that I took on Sunday is still on this, and so obviously we are just. I mean, let me pull up my app here. I think last I checked, these are just we're just on fire right now. Let me pull this up. As far as I'm aware, we're on fire, which is awesome. I'm just pulling this up here. Yeah, this is just ripping. Let me pull up my modified martingale accounts. Yeah, it's a great week, guys. So, and we'll analyze other trades too, but like this is one of them, obviously. And it's cool that we were able to get a price action trade and a weekly trade on this. But like, yeah, obviously in hindsight, it looks like we could have gone for way more. Like if I drag this up, it looks like we could have gone, 1 to 5. Wow. That would have been huge. But I just didn't know. I just didn't know it was going to go that far. So we ended up getting, the 2.75 about right there. Great. Jim says I just closed out this pair for $716. Couldn't handle the apprehension. Yeah, no, that's good. No, and the trade did technically close. Like the take profit did hit, so you're good. Um, and I'm not going to be mad at you guys at this point if you closed out several weekend trades. I mean, it's Thursday. But I mean, let's take a look at the news. Let's see what else do we have going on. Is there anything that could reverse our orders here? Um, CPI actually worked out into our favor this morning. But we didn't have a lot of dollar pairs anyway, but um, there's some pound GBP stuff going on tonight. And there is Yeah, well, I wouldn't say there's nothing really big, basically. There's no FOMC meetings, there's no rate hikes, rate adjustments. I mean, sorry. I'm so used to saying rate hikes that now that's the way I say rate adjustment because we were in rate hikes for like 18 months or 2 years, just constant rate hikes. And so I keep saying rate hikes, but now it's like we're talking about uh dropping rates, and I'm like, well, that's not a rate hike, right? We're gonna cut rates. A rate cut rates. Um, anyway, so pretty cool stuff, guys. So this trade's closed. Let me update that in Telegram. Obviously, stellar of a trade. Looks like we could have gone for more, but again, can't complain. That's it's about as good of an entry as it gets. Looks like we could have done a little bit better on the entry, but really, really cool. Really, really cool. By the way, just another thing I wanted to highlight on these types of trades. Obviously, we're enjoying this fact right now because the stop loss didn't hit. But look, I mean, that was pretty close, right? That was pretty close. I mean, our conversation would have been like, dang it, if we hit that stop loss, right? Now, just so you know, and many of you have experienced this before, if you're new to this style of trading, that's going to happen a lot this year. Like, I can't avoid that. We're going to hit stop losses on great trades so long as we trade price action setups. That's just going to happen. Okay. So, that's why obviously I'm grateful when we win like this, and I'll bag the opportunity. I'll put it in the account, put it in the logbook, the journal, and then move on to the next trade like we're going to do right now. Um, so I'm grateful, but for every trade that wins like this, there's at least 50% other trades that lose, right? So that's kind of what I've experienced with this style of trading is if you can get at least a 50% win rate, you're doing pretty well. And if you can get higher, that's even better. But um, I think with most of my price action trades, I win 40 to 50% of the time. So I don't even win more than half the time. And that's okay because if you keep an RR ratio like this, that's close to 1 to 3 or better, um, you can totally handle a 50% or even less win rate. Okay. The problem that most traders have is and I am guilty of this, is they'll take trades like this with, you know, 20 pip take profit and 100 pip stop loss type of thing. And that might sound silly because you guys are better at trading, right? But I used to trade like that 10 years ago, right? I used to put in overnight trades with, 100 pip stop loss, 20 pip target. I wouldn't let my winners ride. We did that activity or that exercise earlier this week and last week where I wanted you guys to go and look at, find a losing period of time when if you had a month where you were losing money, in all likelihood, most of your losing trades you had held for a long time, and your winning trades you did not hold for a very long time. That's typically um, very standard for a losing trader or even a good trader that has a losing period. It's pretty standard. So this week, what have we been doing? We've been doing the opposite of that, right? So we've had a lot of good, like the scanner signals have been elite. If you hold those from Sunday and have them till now, I mean, how many retail traders out there do you think hold trades for 5 days, 6, 4 days or whatever? Most don't. Or if they do, they're probably going to hold those trades in drawdowns. Most folks are not going to hold winning trades, right? It's very, and I feel it. I feel it too, guys. Like I go through the same emotions. Like I'm looking at my accounts right now, and I'm looking at all these winning trades that I want to close them. Like I have that same feeling. Like I totally know. The thing is, I already did. I like on Wednesday, I booked half my profits. So everything's still going. Is just what's left to ride, right? That's just all extra. We've already booked half our profit, I have to sit with this now because I've already taken half my profits for the week, and now it's funny because after I took half my profits, I more than doubled my profits again. That's how much extra the market went this week. Kind of crazy, right? So it just goes to show the power of holding on to a winner. Again, not all winners are going to do that, but when they really do rip, like this one right now, or like the pound yen or the dollar yen this week, like man, that just really pays to hold. Um, it covers so many losing periods if you hold on to those winners, right? Anyway, let's take a look, guys. So, oh, I was going to make an update here on Telegram. Um, Let me grab, I took a picture of this. Oh yeah, let's take a picture of the end result here.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code friend of Steve, that's friend of Steve, no spaces, at checkout and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
There we go. Okay, cool. All right, guys. So that was pretty fun. So let's take another one. Let's do another one. Had stop losses hit on CAD, Frank, and Aussie Kiwi for about 500. Okay, let me take a look at those. I, I don't think I've had those hit yet. And they're last I checked, they're winning. Um, let's take a look. Um, when did you have those hit, Jim? Because I haven't seen, like with the CAD Frank, it really hasn't done much this week. I could see a scenario where it could have hit the stop loss maybe towards the beginning of the week. I think maybe your stop loss would have been pretty tight. Yeah, yesterday. Yeah, yeah. So you did you have a 40, let's see, you should have had like a 41 pip stop loss on the CAD Frank. Yeah, 40, 41, something like 41, 41 pips on the CAD Frank. For me, my stop loss, my week to week stop loss is at 0.64. Oh, I've got it exactly right here. 0.64106. Yeah, no, I get your percentage. I'm just talking about at what price did you put your stop loss? Like what price on the actual chart did you put your stop loss? Because I do the same thing. I do 1/4% risk, but 1/4% risk of what? Of what stop loss? At what price did you have 1/4% risk? Right, is what I'm trying to get after. Right. Um, because that one is actually slightly positive right now. Um, it's not one of our best trades, obviously, but it hasn't done anything. Like it's been very just static all week. And the most this trade has gone against me since I took this trade is 16 pips. That's the most it's gone against me all week. It's a very low volatility currency pair. So it's not even possible to lose 41 pips because the market hasn't even gone 41 pips this week. That's why I'm saying we need to figure out where your stop loss was. Um, if you lost money on that trade. Because yeah, that means it was too tight. And 0.63862. Let me see where that is on my chart. 0.63. Yeah, that might do it actually. Yeah, so um from where I got in, and this could be different. Like our entries could be different from when you got in this week and when I got in. But that's like a 16 pip stop loss. And yeah, that would close out if you had a 16 pip stop loss. But per the scanner, the on the CAD Frank, the average daily range is 39, almost 40 pips. If you round it, it's 40. Which, like I said, there's no scenario where that would have closed if you had a 39 or 40 pip stop loss. So what I would do, Jim, is if you got in Monday morning, that could maybe let's see, where was the price on Monday morning? Let's actually pull up the CAD Frank because I took these Sunday night. That could be the difference maker. That is another variable to look at, right? So here's the CAD Frank. Um, so this is where most of us got in, was over here in this yellow area. Monday morning could have been, I guess you could have entered down here, and that might have done it. Let's see. If you had sold down here, yep, okay, never mind. So that's the variable right there that I was missing. So I didn't know that you entered on Monday. And that's the difference right there because between this lowest low here on Monday and the highest high this week, I think this is like from here to here. That is 61 pips. So I could see a stop loss hitting at 40. Um, but again, I was just going off of the fact that, I entered Sunday and most of us entered Sunday right in this yellow area to sell. And so 40 pips above this yellow area would have been like up here. And the price throughout the entire week has never been above this area because that's where my stop loss is. Um, So yeah, it's just so sometimes, guys, it just comes down to timing, right? Like, and I'm not saying there's going to be some times where if you entered on Monday instead, like you might do better than me. This is just one of those scenarios where it did pay off to get in on Sunday, and um, there's a little more consistency that way. So that is another variable, right? So most of us have the same stop loss because we're just using the average daily range that's on the scanner. Most of us have the same risk. I do a 1/4% per trade. That's pretty conservative. Um, Everybody can decide what they want to do as far as risk goes on that variable. Um, but um, the one variable that I think is the most off is when people enter. Um, I've had some people sign up for the program even just this week, and they're like, "Can I take the trades?" And I'm like, "Sure, go ahead." But it's Tuesday, right? So now they take them on Tuesday or Wednesday. But yeah, that hopefully, like I said, the goal is for everybody to try to get them in on Sunday night. But if you don't, and I get it, that's totally fine. It still works to trade it on Monday and then hold till Friday. Mystery solved. Yep. No, yeah, totally. Got to be more time. No, you're good. No, like I said, there will be some times where you'll beat me out because Monday's a better entry. We just don't know if it is or is it or it's not. Total game was $1,200. That's very good. That's awesome. All right, guys. So we have um so what I want to do is, like I said, I do want to try to get into another setup. I do want to just take a look real quickly at some of our most positive trades, because this has just been a absolutely crazy good week. One of the best signals we have is this pound yen. It's a strong buy, and it really didn't even have a big shift this week. It was positive, but not hugely positive, right? So it was just negligible. The long-term signal was buy, and then the sentiment signal is a strong buy, and those two things combined was enough to kind of create that strong buy bias on the pound yen. And if we go look at that, this is, I think, my best trade of the week as far as pips go. Let's take a look. Um, here's the beginning of the week over here in that yellow area. That's where my entry was. So somewhere around here I got in, and now here's the market now. Obviously, if you were to look at the scanner and say, well, hey, Steve, it's Monday and I'm down 50 pips, or hey, it's Tuesday, I'm down 97, I could see a scenario where, if you only look at the scanner from a day-to-day basis, it could be kind of annoying. But again, here we are Thursday, so from Sunday to Thursday, and that was the overall signal for the week is a strong buy, and now you're up 200 pip. That's 192 right there, right? Um, so that's pretty cool, right? I've already booked half my position when it initially started to come up here on Tuesday or Wednesday, right here. Um, and I'm leaving the rest of my position to go until tomorrow. Tomorrow morning, we'll go ahead and close everything out. But just fun, guys. This is so fun when things are working out. Here's the USD yen. Um, USD yen, same thing. This is a strong buy. When you look at the scanner, this one also did not have a real significant shift. Negligible right here, as you can see. But then you have a strong buy on the long-term side of things, and the sentiment's a strong buy. And so those things combined is enough to give us that strong buy bias. And here we are, uh, 170, 166 pips later, to the upside, which is really awesome. Okay, so and like I said, every trade, I'm looking at all my trades right now. Literally every single trade on the scanner here is positive, except um I think I think that's pretty much it. Um, the NZD franc is flirting with like it's it's basically where it started. It's just barely positive. And then my CAD franc is also just barely positive. We just barely talked about that one. But yeah, all the other ones are doing good. Pound Aussie long's great. Euro Kiwi long, Euro CAD long, Pound CAD long, Aussie dollar sell, USD CAD buy. All fantastic trades this week. Okay, so what I'd like to do, as always, I just want to kind of go and look at the different charts to see if we can find a good setup. Let's start with the Aussie Franc. This is a sell, and let's just see if we can find that classic, break a structure setup. That's all we're looking for um, when we're looking at price action trades. All right, so I'm going to analyze this one. So first thing that it comes, like the first thing I see right here is this trend line. That's like the first thing that just came to my mind, and then boom, there's a break right there. That's a break of structure. And so there's probably stashed liquidity all throughout kind of this area right here. That might not be a bad area to sell. If you can get the market to come back up to there, that might not be bad. And then you can also use these order block indicators to kind of aid you in that process. Yeah, sure enough, there's a block right there. They're saying it's right here is a block. So we might use that if we decide to take this trade. And then smart money says that there's a block right there. So yeah, that whole area is a selling area. We might use that, but I'm going to come back just because I want to see if I can find something with bigger concentration of order blocks. And if we can find that, then we'll go with that. Let's go to the Aussie Kiwi. This is a strong sell. So I'm going to kind of go quickly. I just need to move on here um, uh, as I look for setups. I got these order block indicators on already, so you can see there's a big concentration up there. That makes sense because We did indeed break a structure right through here. And yes, whatever took place in these two areas, absolutely, uh, um, whatever happened in here absolutely caused this break. Now the thing is, this one's been tapped into. See this big wick right here? That's that that got tapped into. Basically, whatever was right in here, whatever happened in there that caused all those order blocks, it got mitigated with that candle. So you can't really use that order block anymore. Well, I mean, you can, but I don't like to use those order blocks anymore after they've already been mitigated like that, right? Because what happened after it got mitigated? After that order block got mitigated, it's now down here, right? Like that's what happens when the markets hit a major liquidity zone like that, is they're on their way. They take off, right? Another homework assignment, if you guys want to do this today, I've had people do this before. If you've done this before and you don't want to do it again, that's fine. If you've done this before and want to do it again, fantastic. But basically, a homework assignment would be like, go back and look at the charts, find the biggest pivot points you can find. Like right here, here's a good pivot point. Here's a big one down here. Um, there's a pivot point there even. There's a pivot point here. Basically, go and mark all the pivots and then go back in time and find out why did the market pivot exactly at that spot. And you'll often find that it's usually associated with some kind of mitigated uh, order block zone um, that caused that break of structure, right? Or that caused that pivot. Okay. So with this one, I don't have one that I can use because it's already been mitigated for the most part. So I'm going to move on to the next pair. And I've got the Aussie dollar. This is a strong sell. Let's go take a look. This guy is down a ton today. um, yeah, I'm actually going to turn these off. We actually don't need these for now. I'd like to use them as confirmation, but we don't need them for now. But so when I look at this chart, we had some news this morning that caused the Aussie dollar to sink. And this is basically liquidity. All of this is liquidity. Um, the thing is, I would say it's been mostly mitigated by that candle at that news event today. Um, Especially whatever took place in this area, it all got wiped out. So I probably wouldn't use that again. That looks like there could be an area right here that could be useful, but does it break structure? Not really. Um, so I really don't want to mess with this one. I'll move on to the next one. I'd rather just find something I really like. Let's go to the CAD Franc. This is a strong sell. This is the one that we were talking about that hasn't really done much this week. Um, yeah, it just really hasn't done anything. When you look at the chart here, yeah, that yellow area is the start of the week, and it really just hasn't been, when you look at where it started the week, yes, it's gone different places during the week, but it's really just where it started. Now this is interesting. I'm kind of sad I missed this trade last night. That was totally a liquidity zone right here. Absolutely. Whatever took place over here broke structures over here. You can see those breaks right there. And I did not capture that. That's my bad. Like that would have been really nice to have sold right in that candle. And it came right up and tapped into all of that right there. So anyway, that one's been done. Again, I can't really use it. I don't have a break of structure. It just really doesn't match my style. So there's nothing I would really use there. So I just move on. Then I go look at the NZD franc and see if I can find something good that I like over here. Oh yeah, I this basically did the same thing that I was talking about. I kind of missed this one, but yeah, so this had a nice little break of structure over here. This is your classic liquidity area right here. Market came right up into it and then pulled back. Um, so again, that's already been tapped into. Probably can't use that now because it's been done. I don't like to use it over again after it's already been used. So that kind of stinks that I didn't anticipate that in time, but that's okay. Let's find the next one. I'm gonna skip oil. I don't really trade oil that much. But there is a strong sell this week. Right now, it's mainly due to sentiment. There is really no long-term bias on oil. There is a generally there is a smaller negative shift this week on oil, so we'll see if it does. I know it's up quite a bit today, but it's just not one that I don't even have the capacity to trade it with my broker. So I don't, I mean, if you want to, great. There's definitely going to be some great opportunity. There has been a lot of great opportunities to sell oil this week. Um, but I'm just going to move past it. So now let's go to the next currency pairs. We've got the Euro CAD. That's a strong buy. Okay, so here's the Euro CAD. So this did have a really nice structure break today, similar to the USD CAD right here. That is definitely a structure break, right? All of that. Easy to see that. So now um, there are trapped orders in this area. Most likely, this is the liquidity we'd like to get the market to come down and tap into, is right in here. Whatever took place in there would be ideal. The big question is if we can get the market to come back down to there. Now, there might be some fair value gaps along here that we might be able to tap into. Let me see if there's other order blocks we can use. Um, yeah, see, here's a smart money. They're saying the same thing I was saying. This area, exactly right there is what I was thinking. So that would actually probably be the best trade I've seen so far. Again, we'd have to wait for this to pull back a significant amount before that trade would execute, but that nonetheless would be a pretty good trade. We'll come back to this one after we continue to analyze a few others, but that might be the trade we take unless we can find something better. Next one's the Euro Kiwi strong buy. Let's take a look. Okay. Um, Yeah, I don't really have a significant break of structure right here. They're saying that this is a break. Okay, maybe. If so, then that would mean that this is all liquidity down in here, right in this area. I don't like it as much, but here's what's cool about this one. This one definitely has not been tapped into. Like this is freestanding liquidity, 100% hasn't been tapped into. There's a really good chance that the market came back into here, you would get a pretty good bounce. Okay. So that is the redeeming quality to this one. It's just not a clear break. This is a very significant, robust move right here. So yeah, if we could get back into here, since it hasn't been tapped into, pretty good chance you'll get a bounce there. So maybe we'll use that one, but I'd like to see what else we have available. Pound Aussie, and pound CAD, pound yen are strong buys. Let's go take a look at all three of those. Okay, we'll start with the pound Aussie. Yeah, huge move today. This has been like we're crushing it right now, guys. We're absolutely I'm like watching my trades as we speak, and like things are just going in our favor big time, right? We bought this guy at the beginning of the week, and here we are. Um, just wow. Amazing, right? Anyway, so this one's kind of interesting. This had a little flag pattern right through here, and it ultimately broke up, which is kind of an expected move. I would say this liquidity zone did get tapped into right there. That did come back down and mitigate what was in here. So I'm not a big fan of that. Um, it's already been mitigated, so that's probably just going to keep going up. I don't see a scenario where the banks need to come back down here because it looks like they already did their dirty work. They already did what they had to do um, down there. So I'll move on to the next one, which is the pound CAD. Okay, so this one's really messy, but has the potential to do some good things. I remember earlier this week we identified this area to be pretty good demand zone. Um, Looks like that was the case. This is really messy in this area right here. Quite the confusion. I could actually see a scenario where this one comes back down, just because this move to the upside is not like its brothers. So, pound Aussie, pound yen, those guys have been just ripping to the upside. This guy has not, right? So pound cat has not, which kind of means, well, maybe this is struggling to follow suit, which means that when things start to pull back, this guy's probably more likely to experience a pullback that's a little bit more significant, right? So I'd be cautious about buying this one, actually, because it just hasn't followed its brothers very, very well. And the fact that you've got so much that it's very static in this area says that they really didn't like the idea of sending this higher or lower, so that when this move to the upside is over with, it's probably going to be a very significant move to the downside. Just that's my thoughts. I'm going to move on to the next one. So the next one is the pound yen. That's one of the other ones this week. This has been doing great. This is at now in a just a this is kind of flagging as well right now. There could be places to buy in this flag, but um, I hate to do this because I don't have a base, right? Um, there's no base along this, right? So if the market pulls back, who knows how far that will pull back. Um, so because of that, I can pretty much just only use whatever demand zones are in this flag. So anytime you come down to the bottom of the flag, like down in this area, those are good times to buy. So you might be able to find some short-term opportunities to buy the pound yen down there, but I'm probably going to steer away from that. Um, it's already been tapped into many times, so I don't know how many more times it'll get tapped into. Okay, then we got the USD CAD and USD yen buy. Let's just check those last two, and then we'll probably settle in on a trade setup. Wow. We already talked about this one earlier, but wow, just wow. Um, yeah, this was the base down here, and we caught this one. I don't really have any other. I mean, the thing is, where we literally bought might actually be some more demand yet again, like down here, but it's so far away from the current price that it's likely to form different levels of supply and demand now up here instead of down here because it's gone up so far. So I'll probably, yeah, I'll skip this one. Let's go look at the USD yen. Nice. Okay, so this one, um, dang, I missed this during the news event. I was looking at this area right here. That would have been nice. Yep, that came and tapped right into that right there during the news event. Okay. And yeah, that was perfect too. It had a nice structure break right through here. Not a bad area to get in. Um, yeah, I don't really have any areas of interest here that I'm excited about. Other than there might be something in here as well, but let's see. Do we have any order blocks? Yeah, there's an order block there. Let's try. Yeah, there's order blocks here and here. Okay, so not too bad. This whole area is an order block, so it's kind of confusing because, yeah, there's a concentration right here, but there's also a concentration down here. So I don't know how far this market could go down before it goes back up. So I think I'm going to settle in on, I think it's like the Euro Kiwi, or it was another Euro pair. Um, Maybe was it the Euro CAD? Maybe it was the Euro CAD. Let's go take a look. I think maybe it was. Yeah, so okay, yeah, I like this one. So yeah, this does look pretty good. So this had the most obvious structure break right here. Um and this is by and large, I would say, an untapped liquidity zone. Um let's see, is it even a Fibonacci retracement? Yeah. Yeah, I mean, it's between the 38 and the 50 is kind of where and the 61 or 62, yeah. Let's see, do we have order blocks? Let's take a look. Yeah, right there. Smart Money's got two right there. And the detector does not have any right there. They're saying they're down here, which I could see that scenario too. I could see the market dip into this area. Um, that's actually a pretty good area. I don't know if the market will come back into this area, but there's two trade opportunities. One's right here, and the second one is down here. If you could get an entry right there, that's another really good area to buy the EuroCAD if it dips into either one of those areas. It's pretty good. We'll start with just this one right here. Here, let me delete this. We will start with this guy because that's the most recent demand and break a structure that's pretty obvious. So a dip into here would be spectacular. Okay. So let's go ahead and label everything out. Let's get this set up. We'll go ahead and take a buy position, long position right here. We'll stop out beneath this and just try to get in on this demand. And then again, we want to try to get a 1 to 3, ideally, but even better if you can. Let's sometimes I have to use a higher time frame to find order blocks. Okay, so if I can't find an order block I need on that lower time frame, I can use these higher time frames to find those levels. So it does look like there's a level just above that right there. And yep, there it is. Yeah, so let's zoom in so you can see I've got a couple of blocks right up in here. I'm going to try to go to that with this setup. Okay, so now I can go back down to my 15-minute and have a little more confidence with placing that target. All right. So that's all we're trying to do, guys. This is just a classic break of structure setup. We're just trying to get the market to pull back below the break into an area that's unmitigated and demand that aligns with the scanner, and then just try to get in that way. And this is a 1.3, well, let's see, a 1 to 3.41, so that's pretty good. All right, let's go ahead and take this trade and we'll wrap up. Yeah. Uh, as I put this together, I was just going to tell you guys. So last night we had a pretty cool webinar, or a couple of webinars. We did a EA and copy trader webinar. Those recordings are uploaded if you want to go back and watch those. we did a class on EAs and copy traders and also just our normal COT report webinar. So, yep, you can go watch those when you have time. Okay, 1.46534, 1.47270, and then we got 1.46701. Okay, perfect. Okay, awesome. Yes, got that one posted. We'll let that sit and do its thing. See if that can trigger tonight or tomorrow. And great, guys. Well, so and as far as the weekly trades go, I don't know how many pips they're up. I know we're doing obviously really, really great. So I do plan to just continue to hold. I will also give you guys some confidence in the future, holding every week. If you're able to at least hold, again, I'm not against you guys closing half of your weekly trades kind of midweek to book some of that profit. Sometimes that's a really good thing to do. I think if you asked me a year ago, I would have been pretty mad about that. But no, I think it's okay to book some of it, but I think it is really good to hold on, let the rest of the trade do its thing. I think that's a good thing. Seems to work out in the long term. So we'll let those trades continue. I am itching to just close them, but we'll go ahead and do that tomorrow. All right, guys. Well, enjoy the rest of your day. If you guys have questions throughout the day, feel free to call, text, or send me an email. I've got a few texts and a few emails to get back to. So if you've sent me something recently, I'll get back to you today. I've got some time allocated to get back to everybody. But yeah, hope you guys enjoy the rest of your day, and we'll see you guys in the next webinar.